What is up, everybody? Welcome back to the show, Bitcoin and Markets. My name is Ansel Lindner, and today is Friday. Happy Friday out there to everybody. We made it another week. I don't know about you, but for me, with kids and a wife that's working full time, that the week is like Friday is a big deal for my family. Anyway, so we made it to Friday, and not too much is going on in the news cycle. I picked out a few stories to talk about Bitcoin and AI, Bitcoin being the perfect match for AI. We're going to go through a new video that was released with Lightning, working with um, an AI coding software. I guess I don't know exactly how to describe it. Then also we have a tweet by British Hodl talking about market cap and how Bitcoin can absorb different assets and different market caps from store value function from different assets and what that means for the Bitcoin price. These are things that we talked about in the Telegram server. So if you want to join the Telegram, go to t.me/Bitcoin and Markets. Also check out the website, bitcoinandmarkets.com. Let's go right there right now. Share the screen. This is my home base for everything related to my content. I put out a Market Pro newsletter this morning. It is bearish probabilities rise. So we will take a look at the charts here in a second as well. But that is my professional tier where I put out probably 20 charts in a weekly newsletter talking about the Bitcoin price, what I see near-term, mid-term, and long-term forecasts. Also, you can see a post here for FedWatch. I always post it the next day for people to go and make sure they catch that. We do live stream with Bitcoin Magazine on Rumble and on YouTube. Rumble is consistently beating YouTube on viewership. It's very, very interesting. I think maybe because the Rumble people know the Bitcoin Magazine people, and so there was something at the algorithm that favors Bitcoin Magazine over there. But very fun episode yesterday. We talked about the ETFs, Larry Fink's comments. We talked about CBDCs. I'm sorry, guys. Hold on. Buddy, I'm live streaming. You got to get out of here.
But is this a knife? Okay.
It's thunderstorming outside right now in Florida here. And so my 6-year-old is not out enjoying the yard. He's inside bothering me. But anyway, so yeah, that was a good show. And Nolan Bowerly, he co-hosted once again. He was only supposed to co-host 3 shows, I think. CK had conflicts for about a month there. But then CK has had more and more different meetings right around the time that we do FedWatch. But CK will be back next week. That he has promised me he'll be back next week. So can't wait for that. What else? That's about it about the website. Check it out. Support my content there. This is a listener-supported podcast. Appreciate everybody who has already supported. Okay, let's take a look at the charts. It's been a ho-hum day. It's really been a ho-hum last few days for the Bitcoin price. You can see we have sold off, had 3 red candles in a row. Now we finally have a green candle. We are in this horizontal band. So let's see if I can draw this on here, this parallel channel right up here at the top, which is a good sign. And right in this pink resistance, which if you've been a listener to my content, you know that I have been talking about this for months, hoping to break out of this. The key level is 31,500. Last week's Market Pro, I said that is the key level, 31,500. And wouldn't you know, the exact high on Bitstamp was 31,500. So we did not break that. But it's still not looking horrible. It's just not as quite as bullish as it has been over the last going back to the end of June, very, very bullish. Then we had the ETFs. I feel like the space is kind of on a, we had all this adrenaline from the ETF, the BlackRock ETF filing. And now we're kind of coming off that high. At least me personally, that's how I kind of feel. The market is kind of reacting in that way as well. But overall, it's still bullish, especially on the daily, weekly, monthly timeframes. There is zero bearishness really out there. the bearishness that you can find in these charts, which if you go to Market Pro, you will see I did a bunch of 4-hour charts. That's where you start finding some bearishness. And of course, the way the trends change, they start changing on the short time frame and they work their way to the long time frame. So we have to be aware of that. One thing that I did point out as well is this. Let me take some of these things off of here and bring up these are the divergences. And what I'm going to do is share that with Telegram. And you can see we have hit a bearish divergence on the weekly chart. That actually is not a good thing. If we zoom back here, I should have posted it back to including this. But if you go back to 2019, that run up, at the first half of 2019, and we had a bearish divergence on the weekly. And I remember specifically pointing this out. This is back when we hadn't transitioned over to Telegram yet. We were still on Discord. And a longtime member of the Discord, Mr. Paz, we were talking about this divergence here exactly. And I thought that this was a bad sign. On a weekly, it is a fairly strong signal. As you can see, they cluster around the tops. Bearish and bullish divergences on the weekly chart on Bitcoin are not like all that common. I mean, you can see if we go back here to 2017, we had several on the way up. So there is history here of having several going on the way up. But in the last cycle, 2019, 2020, it was a pretty darn good indicator, this bearish divergence on the weekly. So this is the one thing that does give me pause on the longer time frames, that we're seeing some sort of trend change here, which I do not want to say, because we have a long way to go until the halving, and we didn't get all that high. So let's do a retracement from the 2017 high down to the bottom in 2018. And I'll get rid of this. And what's interesting about this, if we zoom in, it hit the golden pocket. That's the 61.8 to 66 retracement on this climb up. And this is a very obviously important Fibonacci zone right there, the 61.8. I'm going to post that to Telegram. I've talked about this on my Market Pro quite a bit. I've measured out all of these different Fibonacci's and stuff. But if we go to this current cycle, and we measure from the top here at 69,000 down to the bottom at 15,500, we are very far off of this golden pocket. So it was a subdued bull market. It was a subdued bear market too. I mean, I think we only dropped a total of like 73% from the high. Let me measure that out too. This is starting to get cluttered on the chart. 75. Okay, we dropped 75 from the top, which is on a cycle comparison. That is the least drawdown that we've had on a cycle for Bitcoin. So yes, we had a muted bull market, but we also had a fairly muted bear market technically. But it feels very painful because it's been long and we didn't have the euphoria in the middle there. I'm going to post that to Telegram. So if we had a muted bull market, muted bear market, are we going to have this muted middle wave that I have been kind of expecting, similar to 2019 that we had, and we kind of go sideways from here until the halving? That would be extremely painful. But the one thing that doesn't make me think that is that we have the ETFs. These are a big deal. They're not a given, But right now, the price is not buying it. Okay. The price is not buying the likelihood of an ETF approval. So I remember writing about the BlackRock ETF pretty much right away after it was announced, and I said, we will know within a short period of time if uh, what the likelihood is, because the price will tell us. The price will tell us the likelihood, and right now it's not. It's showing that there's more uncertainty over the approval. So, like the Bloomberg ETF guys, this is Eric Balkunis and James Seifert, they have been calling about a 50-50 likelihood. And I think that's probably pretty accurate. When you're looking at the price chart here, I have been saying a 90% chance. So I might have to update this based on price action, that we might even have to go down to a 50-50 right now on this BlackRock ETF. Even with Larry Fink and his connections, BlackRock and his connections with the SEC, it is possible that it's not going to be approved. And I just can't imagine that. It just does not. I would work myself up here if I concentrate on this, because there is no reason to have a futures ETF, a 2x leverage futures ETF, that would use the same pricing that's supposedly too manipulated for a spot market. Okay. But they're using that same pricing for a futures ETF, because the futures use the same pricing that a spot ETF would. It just doesn't make any sense. So that's my current confused thinking on this. But right now the price chart is saying that the chance is less than 90. It's about 50-50 right now whether this ETF gets approved. I also saw some stuff talking about the ETF, and JP Morgan today came out. I don't know if it was on a report or something, some press release maybe, I don't know, but that they don't expect the spot ETF to have much impact on price. Now, I don't believe that for a second. I do not believe that for a second, because the largest ETF ever was $2 billion at launch. If you count, that was specifically a rollover from one ETF to another. So that if you don't count that, the next largest was like 1.3 billion in the first day. And so if Bitcoin does 1.3 billion, which some experts are saying that they kind of expect this to be the largest or one of the largest ETF launches ever, that's $1 billion in one day. That's going to move the price, guys. That's definitely going to move the price. And if there's, let's say there's 3 or 4 ETFs that get approved, and they all launch within a month, they're not all going to have the same, first day. But let's just say in that first month, it's $10 billion maybe. Even if it's $5 billion in a month, that's a lot, guys. That is definitely going to move the price. So I don't buy this with JP Morgan. Maybe they're trying to, keep price suppressed so that they can get in. I don't know. But that was out from JP Morgan today. Okay, let's go on to this tweet before we get into the Lightning and AI stuff. This is from British Hodl. I did share it on Telegram for you guys. So, by the way, guys, I am live streaming on YouTube, Rumble, Twitter, Twitch, and Telegram. So you can find any of those platforms and listen to my stuff there. The main kind of all day hangout that we have on Telegram, t.me/Bitcoin and Markets. And bitcoinandmarkets.com is where you can support my content. And I appreciate everybody that supports the show. Okay. British Hodl said, this is Bitcoin's warpath. So where Bitcoin is going to go first. Where are we attacking first from a value accumulation perspective? And he says, number 1 is gold, and gold's market cap is 12 trillion. And if that all came into Bitcoin, that would be a $500,000 Bitcoin. Makes sense to me. But this is kind of iffy too, because I don't think that gold is going to lose its like its store value that it has right now. I don't think it's going to lose in the coming years. The same reason why Bitcoin is going to gain is the same reason why gold is going to maintain. I hope that makes sense. Because we're in a end of a giant global credit bubble. People are going away from elastic credit-based money towards more counterparty risk-free money in sound money. So gold is going to benefit, but so Bitcoin is going to majorly benefit. Bitcoin has a lot more room to go. So I don't think we're going to suck that 12 trillion out of gold. I think that maybe if gold were to double, say, in the next 5 years, Bitcoin will get most of that doubling away from gold, and gold will just maintain 12 trillion, and 12 trillion will come into Bitcoin, So there is that. But over the long term, I do think gold will slowly lose its store value function, its monetary premium to Bitcoin over the long term. But okay, so that would take us to 500,000. And all of these things are going to happen simultaneously too. I hope I don't lose power here, guys. We're going through a thunderstorm right now outside, if you can hear that. Okay, U.S. stock market is about 130 trillion, and they say a lot of that can come into Bitcoin. If that came into Bitcoin, it would be $6.2 million per Bitcoin. Of course, I don't believe that's going to be the case, but if there's these ETFs or other things, there could be 1 or 2, 3, 4, 5% that of this 130 trillion that comes into Bitcoin. So that would be another, say, maximum 10 trillion out of that 130 trillion would be coming into Bitcoin from that. So that would pump the price even more. And then the third one here, he has real estate. That's the big one. 330 trillion in real estate. Now, the reason why Bitcoiners say that Bitcoin can take some of this store value from real estate, because a lot of people have second or third homes even. And a lot of people, they use their homes or their home for value appreciation or for storing wealth, generation to generation, even, handing down property. Well, if you have a competing asset that's a fixed value asset that will only ever go up, Bitcoin is designed to only ever appreciate. And I mean, yeah, from a year to year perspective, you might have some periods when it's fully adopted and, say Bitcoin has a 50 or $100 trillion market cap. There will be years that the value of Bitcoin goes down slightly. But for the most part, it's going to be extremely good store value, and it will tend to appreciate at the rate of global productivity gains. So that's kind of how sound money people talk about this. But real estate, so I don't know even how to estimate this, but it's not all 330 trillion, because real estate does have consumption value, right? You do live in your home, has use value. So it's not all monetary, like store of value function in real estate. But let's just say, even if it's 10% of this, that's $30 trillion from the real estate sector coming into Bitcoin. It's probably more than that. Like, if I just think from my personal experience, over the 20 years that I've owned homes and stuff like that, I mean, appreciation in housing and the store value of your house, that it does matter. It's a huge, huge part of why you buy a house, even where you buy a house, what school district you buy a house in, what state, what part of the city. It's very important, the store value function of your home. So it's probably more than 10%. But even if it's 10%, that's 33 trillion coming out of real estate towards a Bitcoin store value. So anyway, that's the kind of stuff we talked about this morning on the Telegram. And that's all I got for this. So let's go on to the next one. This is a video that came out documenting Bitcoin, put it out, but I did see it from other people like Let me refresh this actually. I did see this from other people like Dylan LeClaire. He retweeted it. It's been making the rounds on Bitcoin Twitter. But this documenting Bitcoin tweet says artificial intelligence programs like ChatGPT have learned how to send Bitcoin payments. To put this in other words, machines can pay other machines. And also, I didn't read through all of this today, but Arthur Hayes has a good post out here about this exact same topic about Bitcoin and AI and why AI will use Bitcoin. I personally have talked about this for quite a while because AI, for it to make like important decisions, it's going to have some sort of understanding of cost, right? And if it's going to allocate resources in any way, shape, or form, it's going to have money. So an appreciation for money. And it also is a way for a AI to somewhat be able to understand human beings better. Maybe require, because like if you sell electricity to the AI, they have to pay for it in Bitcoin, and they can earn it by doing services for humans. So this is a way to shortcut those 3 rules. Remember the 3 rules of robots, whatever they were, like do no harm and don't let any harm come to a human by doing no harm or doing nothing. I can't remember them, but those 3 robot rules. But you don't even need those if you just say, hey, you got to buy your energy in Bitcoin and you earn it by doing services for humans, right? Then you align everybody's incentives. You even give a way for a possibility for AI to become extremely creative serving human needs. Like that we don't even know that we need. They are a market participant if they're buying and selling things on the market. I think it's fascinating. But if the people are going to use this for any sort of allocation of resources, if the government's going to use it or large corporations are going to use it, I've heard they're using it in war, even, like over in Ukraine, people are using AI to predict things. And if that's the case, they need to have understanding of money so that you can allocate resources properly. I hope that makes sense. But yeah, I thought this was fascinating. This video here is just showing, hey, they asked them to write something. They asked the AI to write something, and then they had to pay for it in Lightning, and then it coded it. Then they say, oh, well, guess what? We're actually can you write that in Rust instead? They said, okay, pay this little Lightning fee. You pay the little AI, and it will do your job for you. So very, very interesting stuff, guys. And I think that this is the type of thing that comes out of nowhere. I mean, some people could obviously, I guess, conceive of this, say, 5 or 10 years ago. But the way this kind of has developed and the way it's going to come out and it's going to hit the market, for most people, it's going to come out of left field and it's going to be completely amazing. It's going to take everyone by surprise. So anyway, I don't know. That's all I have on that. So guys, let me go back to the website. Guys, check out bitcoinandmarkets.com. Thank you so much for hanging out. Happy Friday. Hope you have a great weekend. I'm going to try to do a live stream this weekend as well. So stay tuned on all of my different broadcasts where I'm broadcasting at: YouTube, Rumble, Twitter, Twitch, and Telegram. And that's going to do it, guys. Thanks. See you next time.